Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of www.oneoption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. If you're watching the videos on YouTube, the introduction is a three-part series. They describe my systematic approach to option trading. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products, or to subscribe to the free trial, please visit my research site. That web address spells the word 1 out. Both sites are linked, and www.oneoption.com will ultimately get you where you want to go. I'd also like to mention that the Chart of the Week video on YouTube is divided into two parts. Make sure to watch the second part since it has the highlighted stock. 75% of all stocks follow the market. That's where my analysis starts. Let's take a look at the market action. This is a one-year chart of the SPY, the S&P 500 Depository Receipt. Here we can see that the market had pulled back last August and rallied to a new all-time high. Since making that peak in October, the market has steadily pulled back. It had a capitulation low in January, and you can't really see it in this chart, but it got down to the 126 level. It rallied, and then we had a retest of that 126 level in March. That was a double bottom formation, and we had a nice ensuing rally that followed. That rally got us to the SPY 144 level, which was major resistance. On a 5-year chart, you'd see that that represents the breakdown of a 5-year uptrend. At the time, that was also a 200-day moving average, and it also represented significant horizontal resistance that dated back a year. Since hitting that resistance level, the market pulled back very sharply. It came down and it took out that double bottom area with ease, and now the market is actually closed below that support level. Previously, we didn't know if this rally would get us all the way back or if it was simply a head fake. Now we know that this was simply a short covering bounce. But it does demonstrate another point, and that point is that these bounces in a bear market can be very legitimate and long-lasting. Let's take a look at the 1-month chart. Here we can see the steady selling pressure that we've had throughout the course of the last month. Very few rallies, and every rally is immediately met with selling pressure. I haven't done a chart of the week pick for a while, and you might expect that I'm going to be favoring the bearish side. Long term, I am bearish, but on a short-term basis, I feel that we might be near a capitulation low. And here's why. On a 1-week chart, we can see the volatility in the market. We had a big sell-off here with support at 124 and then a nice rally going into the close. The next day, we tried to open lower again and had another nice rally into the close. Yesterday, we had almost the opposite. The market tried to work its way higher after this reversal. Market opened lower and reversed higher. So now it's trying to follow through and establish that support level. Unfortunately, late in the day, sellers came in and they pushed the market right back down. Today, we have choppy back and forth trading action. Now, while this might seem very nervous, this nervousness is actually better than what we've seen over the course of the last 6 weeks. Almost every rally was sold hard, and the market continued to deteriorate on a day-to-day basis. At least now, I'm starting to see some two-sided market action. I believe we'll see a big decline one day with maybe a 30 or 40 point S&P 500 decline, and on an intraday basis, that decline will be reversed, and once that capitulation low is set, we might get 2 or 3 days of a nice follow-through rally after it. So I am looking to play that bounce. Longer term, I feel that any sustained rally will set up a nice shorting opportunity. So in future weeks, you can be expecting some bearish picks. For today, I'm going to focus on a few bullish trading setups. The proprietary search that I'm going to be looking at today is called BDCE breakout. That stands for bullish day continuation early. And I'll be looking for stocks that have been in an uptrend, have stalled for a few days, and today's high is actually creating a new 10-day breakout. In a situation where we have a severe market decline, any stock that's got positive momentum would be of interest to us. If this market does put in a capitulation low, these stocks are going to be leading the market higher. If by chance we're on the wrong side of the market and we do get a severe decline, we already know that there's relative strength in these stocks. They should hold up fairly well, and we should have an opportunity to exit these trades without taking huge losses. These are the search results that came in on the BDCE breakout scan today. And you can see that we've got about 10 or 11 symbols. What I'll be doing is I'll be flipping through each one of these charts, and I'll be using my pattern recognition skills to identify opportunities. As I'm doing that, I'll be describing what exactly I'm looking for, and ultimately we will get to my chart of the week. The first chart that we'll be looking at is symbol MYGN, MYRIAD Genetics. We can see that the stock ran up dramatically last fall, and it hit a peak of about $57. Since hitting that peak, it's been in a steady decline, and in March, that was the market retest that formed the double bottom. That's when this stock hit a low of $35. Since hitting that low, we can see that it immediately bounced off of that level, and it's been grinding higher ever since. While the market has been falling and making a new relative low for the year, this stock has held up very well, and right now it's actually trying to challenge that prior $57 resistance level. So this tells me that the stock has a lot of relative strength right now, and it would be of interest to us. On a 1-month basis, we can see that the stock is choppy. The market's been choppy, so I would expect this type of price action. We recently had a nice breakout above $51. And on a 1-week chart, remember the weekly chart of the SPY that I showed you where it was all over the board? Look at this stock. It's nice and stable, and then here we've got very constructive price action, and lo and behold, today we've just broken out above that $57 resistance level on a 1-year chart. So this stock is definitely of interest to me. This stock is DAVITA, symbol DVA, and here we can see that it too rallied last fall, and it pulled back similar to the previous stock, and it made a low when the market was testing that double bottom. It has rallied up off of that low, but unlike the other stock, it's actually stalled, and it doesn't have nearly as much upside momentum. I'll also say that I would prefer to see for a bullish stock a stock that is rallying and it's going up on the chart from the lower left-hand corner to the upper right-hand corner. And I also would be looking for a minor pullback, support level, and for a little reversal off of that support level. So this stock really doesn't meet that criteria. You can look at it on a 1-month basis. It's actually performed pretty well. And on a 1-week basis, we see that it had a big gap up today. So we'd want to investigate what that news was. But I'm not as crazy about this particular setup, so we'll move on. Here we have another stock with a similar trading pattern. We can see the stock ran up, closed at a $50 high last December, pulled back with the overall market, although the nice thing about this stock is you'll see that the relative lows from last year were not even challenged when the stock pulled back to that March low. It also has taken its time rallying off of that low. So here we have a nice little breakout above horizontal resistance at $40, and the stock's continuing to grind higher. On a 1-month basis, that's exactly what we can see, the $40 breakout and then a nice continuation here. and on a 1 week basis